SPY recap. I've done a video on the SPY, I want to say every day dating back to like mid or early October. My messaging or my stance has not changed. So really briefly, granted there is volatility, right? In the shorter term, I am bearish on the market, hence why we are short. Mid to longer term, I am bullish on the market, hence why I think you should be looking less in your trading account and more in your retirement or long-term portfolio account to scoop up stocks that are battered down, that are off 10, 15, 20% from their high. I think those are essentially early Christmas or holiday gifts, and folks should be buying them in increments. I do not think that this is a time for panic. We are not in a bear market. We are barely in correction territory if we are in correction territory. And I think if you take a more sort of strategic approach to the markets, you should make out fine. Okay? So, a couple of other things before I go. 2 price points that's super important to me: 260 support, 280 resistance. Any sustained move, I think that's the direction the market wants to go in, meaning if we trade above 280 and we can sustain that move, that would be bullish to me. If we breach 260 and we remain below those levels, to me that would be like a bearish indicator. For now, we are short the market in the shorter term. I think it would be wise to be buying the market now for your mid to longer term portfolio. You are going to make out well. My opinion is the market will eventually resolve itself to the upside. History is always on the bull's side. That's my take, ShortMeTina. What else do we have? All right, so let's round it out with JD daily chart. Stock is off something like 4.75% on the day. We closed at 23.05. You can actually play this, in my opinion, several ways. So I would say that the chart technically is bearish because we're revisiting price points or lows we haven't seen since the stock IPO'd back in 2014, right? So that's about 4 years. However, if you pay attention, you'll see sitting here at 23.05, the stock is actually approaching 4-year support. Now, from a risk-reward perspective, going long at these support levels, in my opinion, makes sense. You'll get that initial bounce, but if that bounce cannot be sustained, right, and the stock actually pierces through this support of around $20, then in my opinion, that's a short. And we can also say that this is a rounding top, which is a bearish technical pattern. So in my opinion, you know, taking sort of second guessing out of the equation, you can play this chart 2 ways. Buying support, which I think you're going to get buyers to step in around that $20 mark, right? And before kind of selling that dead cat bounce, I would wait to see whether or not the bounce is sustained. If it cannot be sustained, it reverses course, and we breach to that support of 20, then for me that would be an opportunity to short. And if 20 cannot be sustained, then I think the stock is going to be punished, and punished really badly. All right, so 2 ways to play it. I have my take, which is the better play, but that is just my take. So that's it. ShortMeTina here from ShortMeTina.com. If you enjoyed any part of this video, do 2 things for me. 1, head on over to my YouTube page at ShortMeTina. Hit that subscribe button. Turn on notifications. I do videos every single day. This ensures that you do not miss any. Then head on over to ShortMeTina.com. Sign up. Become a member. Thank you for listening. And as always, thank you for the support. TGI.